CBOE recently launched options contracts on S&P 500 dividends. So now we're going to find out how some big portfolio managers are putting that to use. Joining me now is Sarah Dahan. She's portfolio manager with Blue Mountain Capital. Great to talk to you today.
Well, great talking to you, Angela.
So as a portfolio manager, what kind of strategies are you pursuing?
Well, we deal with S&P 500, but we also deal with European dividend, which so far has been a most liquid product in those dividends, but we hope that the American one will become more liquid sooner. In terms of the strategies that we pursue, it's really kind of every type of regular strategy, being long or short dividends, long or short like dividend yield, meaning dividends versus the index. Sometimes we have some micro fundamental view about a name that we really liked. We really think that the dividend has some potential of growth, so we go for those kind of trades. And there's also a little bit of term structure trading, meaning the curve of dividend implies dividend up to like 2017, 2018. Mm-hmm. So you could trade the growth or the steepness of that curve from like 2010 dividends to 2017 dividends. So it kind of translates a little bit your view about the growth of the earnings going forward, or what you think is priced in versus what you think should happen. So that's an interesting way of playing it as well. Another trade that we could be looking at is some kind of geographic relative value. There has been a lot of talk in the market about like the growth in Asia, and you could be trading those Asian dividends versus, let's say, the American one or the European one. Some dividend in Asia are more liquid than others. Nikkei is fairly liquid. We can trade some dividends on HSI as well that are much less liquid. But it offers some trades opportunity, I think, to have a kind of a scope of looking into those different regions and how they should perform versus each other.
So Sarah, I'm wondering, what was the consequence of the launch on the options on the S&P 500?
Well, if we go back 2 years ago, Eurex, which is a European exchange, listed some index dividend futures, and that has been a tremendous advance for the dividend market in Europe, I think. And I believe that, and I hope that it's going to be the same thing for CBOE and the S&P dividend options. The way it worked is like in 2008, as Charles described a little bit, there was really like a few players in the market, and when dividends got extremely distressed to a level that was pricing in the Great Depression type of scenario, and they came back a lot from that level. But I think the fact that they were listed and there were no more counterparty risk, so that people could trade them on an exchange and there were a lot of transparency, helped that market grow and kind of come back from very, very depressed level. So I think in the US, I hope that having those dividends option will probably provide the same kind of like interest, transparency, and like a broadening of the investor base, if I may say.
I'm glad that you mentioned the transparency issue, because that has been huge. As you know, we're seeing a lot more regulations that could be coming down the pike. Lots happening there. Sarah Dahan, great to talk to you today. She's portfolio manager with Blue Mountain Capital.
Thank you.